Hello boys and girls, this video is to solve a little puzzle about economic profit and accounting profit. So we've got a question which says that normal profit rate is 12%, the accounting profit rate is 10%, so what's the economic profit rate? This file involves a little bit of algebra, but it's not complicated in any way. It's very simple. If you've done very basic maths at high school, this will be easy to understand. So I'm going to use some letters to symbolize concepts. A equals R minus E. Accounting profit equals the revenue of the firm minus the explicit cost of the firm. The explicit costs of the firm here are resources for which the firm has literally paid money and has bills for, which they give to their accountant to look at. So that might be the wage costs, the rent that they have to pay, the costs of the raw materials and so on. But they've literally paid out money. Okay. Economic profit, on the other hand, is a different concept. Economic profit is the revenue from selling a product minus the explicit costs, like those costs associated with actually shelling out money for which you get receipts you can give to your accountant, but also minus the implicit costs. Implicit costs here are costs that are don't literally involve shelling out money, but where the entrepreneur has given up money in some way. For example, the entrepreneur could have spent his or her time, instead of running their business, working for someone else in an office, for example, which means the entrepreneur has given up wages that they could have been earning. The entrepreneur might have also put some of his or her money that was previously held in the bank into the business. So they've given up some interest that they could have got on their deposit. So they've lost interest. That's an implicit cost as well. So we include these implicit costs where money has been foregone that could have otherwise been earned by the entrepreneur doing something else. Alright, so economic profit is revenue minus explicit costs and also minus implicit costs. But we can call the implicit costs the normal profit that the entrepreneur would have to earn in order to remain interested in running their business. So for example, if we just simplify it and say the entrepreneur could, instead of running their own business, they could have been working for someone else and they could have been earning, say, $50,000 a year. That's an implicit cost. They've given up $50,000 a year in wages. We'll call that the normal profit the business will have to earn in order for the entrepreneur to be compensated for their time. So we can rewrite that as economic profit equals the revenue generated minus the explicit costs and minus the normal profit, that is, minus the amount of money the entrepreneur will have to pay to themselves as compensation for running this business because they've given up earning a wage somewhere else. So economic profit equals revenue minus explicit costs minus normal profit, the money that the entrepreneur has to pay to themselves. Let's rearrange that a little bit. So we'll shift the normal profit rate over to the other side, to the left-hand side. So we've got economic profit plus normal profit equals revenue minus explicit costs. Okay, we've just transposed the n from the right hand side to the left hand side. Then we could notice, aha, look, R minus E is the same as R minus E. So A, accounting profit, must be equal to economic profit plus normal profit. So let's write that over here. Now let's rearrange it a little bit. So we'll transpose the normal profit back from the left hand side over to the right hand side. So now we've got economic profit equals accounting profit minus normal profit, which is really implicit costs, but anyway. And our question says, if the accounting profit rate is 10% and the normal profit rate is 12%, what is the economic profit rate? Well, 10% minus 12% gives us negative 2%, and that's the answer to that question.